What's up, guys? Monday, July 21st. How's everybody doing? I hope you had a nice weekend. New highs today in the S&P and the NASDAQ. Dow was up most of the day and then gave back its gains by the end. I wouldn't be too concerned about that. That's going to head back up, and we will see a new high in the Dow. Fiscal flows are very strong, very strong. When I put together the MMT Trader report over the weekend, we still have the same elements at play on the fiscal drag side. Basically, we're looking at tariffs, individual income taxes, employment and withholding taxes. That's always a factor right there. But the one that is expanding, the one that is kind of growing in its application of fiscal drag, that's the tariffs. And, like I've been saying, we'll see what happens after August 1st. If Trump sticks with that date, he has a tendency to push it back, but we'll see. Right now, tariffs are adding about $30 billion a month in fiscal drag, and that's not nothing. Okay, that's a significant amount. But, that's being offset by interest income transfers, Social Security, Medicare, Medicaid. By the way, the big, beautiful bill supposedly has cuts to Medicaid. So like I always say to you guys, I just go by the numbers, and I see these every single day. Just an interesting point on that is that a friend of mine yesterday sent me an email saying, Mike, take a look at this. This analyst dude, some analyst, I don't know, said, well, we're already in a recession. The guy's saying we're already in a recession because personal disposable income has rolled over. And when I took a look at this guy's data, he was taking data off the St. Louis Fed's FRED database. That was data through May. And, I track this stuff every single day. So my data is like up to yesterday, okay? The data through May included or reflected the April tax drain. So of course you're going to have disposable personal income rolling over because everybody transferred balances to the federal government. That was the April tax drain. But since then, it's popped back. So you're not getting stuff from other people that you get from me. I mean, there's nothing out there that is more current and more leading than what I do. And that might sound like, I don't know what, bragging or some braggadocious. It's not. I mean, it's just not. And I'm not trying to say that I have some special private access today. This is public information. The Treasury puts this out every day. If you know how to look at the Treasury statement and what to look for, and I keep a database and how to compile all this stuff. I mean, anybody could do this. This is public information. So the flows are very, very strong, which is positive for the economy. It's positive for the stock market. I don't see anything out there right now which is going to upset this bullish trend. I mean, I said this the other day. I don't see it in sentiment. I definitely don't see it in the flows. I mean, we might have a little episode in mid-September when there's a quarterly tax drain. Remember now, tax drains have reverted back to their normal impact on the markets, and that's a negative. When we didn't have the debt, when we had the debt ceiling, or when Treasury was operating under the debt ceiling and couldn't really manage reserves that well in the system, those tax drains actually were the opposite. They were positive for the system. Now they're not. They're going to go back to being negative. So maybe mid-September. But then we really have to look at the new fiscal year, which starts on October 1st, because that's when these Doge salary cuts hit. Remember, a lot of people who accepted Elon Musk's retirement or resignation from government jobs They were given their salary until the end of September of this year. So that's going to go away. So we have potentially that. I said that in August 15th, we have a quarterly interest payment. That's going to be a very strong fiscal flow right there. So we're really looking at October, the final 3 months of the year. If something is going to come about as a result of the big, beautiful bill or the Doge cuts, that's when we're going to start seeing the numbers. I mean, right now, if you're talking about the monetary environment, and when I say monetary environment, I'm not talking about the Fed, because that's not a monetary environment. I've been through this a million times. I mean, whatever the Fed does, all that is a recomposition of financial assets. When I talk about the monetary environment, I'm talking about these flows. So there's nothing right now that would be of any concern. And that applies not just to stocks. I mean, that applies to gold, that applies to silver, that applies to oil, that applies to Bitcoin and these crypto things. I mean, there's just a lot. The flows are very, very strong right now, and it's gonna be a bullish environment for all of the aforementioned things. So the CBO came out with a forecast today. That's a Congressional Budget Office, saying that the big, beautiful bill is going to increase the debt by $3.4 trillion over the next 10 years. And of course, I don't want to go into a whole explanation of this nonsense of the debt, though. That's government transfers to the non-government. 3.4 trillion over 10 years. If the CBO is correct, and I have to say I'm a little bit skeptical about that, because there is politics at the CBO. There is partisanship. So I don't know. For me, once again, I look at the numbers every single day, and I make an assessment based on that. And those are numbers put out by the Treasury every day. I see what's going on. I don't necessarily look at the CBO's projections. I look at actual numbers of what's going on. But let's assume they're right, and it's 3.4 trillion over 10 years. That's 340 billion of transfers annually to the economy, to the non-governmental sector. I mean, that's very, very bullish. Okay? I mean, of course, the article that I saw and the way it was presented, of course it was presented as a terrible, horrible, oh my God thing. Like, oh, look, the debt is going to go up by 3.4 trillion. I mean, but it's always going to be presented that way. Because people don't understand, and they're fixated on this idea of the debt. What is the debt anyway? Let's say the government sends you $10,000. Let's say the government sends you $1,000 in a Social Security check, and then it takes away $200 in taxes. You have $800. Your balances have gone up by $800. All right? And the government's balance has declined by $800. That's it. So they're saying somehow that $800 that you have now, that's somehow a debt? No, that is an increase in your balances. And let's say you took that $800. Let's say you took that $800 net that you gained from that exchange, and you bought some T-bills, or you bought a treasury note or something like that. That's a debt? No, it was paid to you. That is an asset to you. So this is how they talk about it. Like this 36, 37 trillion. That's what has been transferred since the beginning of the Republic, since the beginning of time, when speaking of the United States. It's an asset. It's what we own, not what we owe. Anyway, I got off track. So 340 billion additional, if they're right, if the CBO is right, and I'll see the numbers. I'll see the numbers. I'll know before anybody else. Just like I send out things, or I tell you guys things, and then 2 weeks later, a month later, it comes up in the news exactly what I said. Nobody's looking at the numbers. Again, not because they can't. The numbers are there. They're free, they're available, they're public. Anybody could look at the numbers. They just don't. Nobody does. So 340 billion increase in transfers to the economy. That's bullish. That's bullish. I mean, so if that's how it's going to play out, now we don't know about the tariffs. Remember the tariffs, but they're saying that's the BBB. That's the big beautiful bill. We don't know how to tariff. Right now, the tariffs are subtracting 360 billion. All right. But even with that subtraction, we're still having very significant net transfers. So, I mean, I just don't see it. I don't see a negative outlook right now. I mean, unless the tariffs really, or unless the Fed really starts cutting interest rates and you have those interest income transfers go down, like significantly. Right now, they're up about 46 billion year over year. 46 billion more being transferred in interest income this year than last year. T-bill interest is down about 36 billion, but you have interest on Treasury securities, and total interest income transfers are up. Unless the Fed really starts cutting, and I don't see that under Powell. I mean, what else is it going to be? It's either going to be the tariffs, and that's going to have to be a significant increase. Otherwise, I don't see any negative scenario. You're going to get to a point where, let's say, sentiment gets very extreme. You'll have corrections, but in those moments when they happen, that's going to present the buying opportunity. Unless the CBO is wrong. If the cuts in the BBB end up being really significant, and I don't think they will be, because that whole bill, that couldn't pass Congress with deep cuts. So, I mean, it just looks like to me that the outlook is going to remain bullish. I mean, we got a fiscal pump going on right now that is extraordinarily strong. Maybe not as strong as the pandemic, the COVID fiscal pump, but, you know, the difference now is we have an economy that is open and operating. When we had that fiscal pump during COVID, that was a completely different thing, because the entire global supply chain, businesses, workers, everything was shut down. Everything was shut down. And then you had this massive, fiscal. That's what caused the inflation. But now we don't have that scenario. We don't have that condition. The economy is operating as normal, and we just have a very powerful fiscal environment. So it's bullish. I mean, you could just basically, you load up. And if you're smart, you wait for these little corrective periods and you really load up. And then what? You go fishing. You go play golf. You go do something. Your bank account, your brokerage account is going to go way up. That's how I've been playing it. Anyway, that's it for today, folks. Please like and subscribe. And don't forget, go to my website, pitbulleconomics.com. I put out these numbers every day, so subscribers get it. pitbulleconomics.com. Bye.